They told you trading was about being right. They told you that winners had 90% win rates, that they saw the market like chess grandmasters and never missed a move. They told you confidence was everything, that once you found the perfect strategy, the profits would pour in like clockwork. But that was a lie, a comforting lie sold to feed your hunger for certainty. The truth is uglier, simpler, freer. You can be wrong 8 times out of 10 and still become wealthy, if you know how to lose small and win big. That's not theory. That's the math that runs every hedge fund on Wall Street. The market doesn't reward accuracy. It rewards asymmetry. It pays the traders who understand that one great trade can erase a sea of tiny mistakes. That's how the professionals think. They don't chase the feeling of being right. They build systems that make being wrong survivable. When I first stepped into a trading room, I believed the lie. I chased perfection like oxygen. I studied setups until my eyes bled, looking for the holy grail pattern that would finally make me feel in control. For a few weeks it worked. My chart looked clean, my win rate high, my ego inflated. Then one oversized loss deleted it all. Not because the system failed, but because I did. I couldn't take a small loss when it was time. I needed to be right, and that need was my undoing. A mentor once told me, "You don't trade the market, you trade your beliefs about the market." That sentence cut through years of noise. Because if your belief is that you must win to survive, every loss feels like death. But if your belief is that survival creates the chance to win, every loss becomes tuition. Most traders never make that shift. They measure success by win rate, not by expectancy. Expectancy is the equation that separates the lucky from the consistent. Win percentage times average win, minus loss percentage times average loss. It's brutal. It's math. It doesn't care how you feel. Imagine 2 traders. The first wins 7 out of 10 times, but loses 5 times more than he gains on each loser. The second wins only 3 out of 10 times, but earns 4 times what he risks on each win. One looks smart. The other gets rich. Expectancy is the truth behind the illusion of accuracy. Every professional learns this the hard way. The amateurs chase dopamine. The professionals chase expectancy. Because the ego wants confirmation. The operator wants results. You think you're patient, but you're just afraid to wait long enough to be right. In trading, 80% of your profits will come from 20% of your trades. The 20-80 rule governs everything in this game. The rest is noise, small wins, small losses, emotional churn. The market is not a democracy. Most of what you do won't matter. But those few trades that align perfectly with your edge, those rare moments of alignment between structure and psychology, that's where your year's income hides. Hedge funds know this. They spend months waiting for their 20%. They analyze, they stalk, they prepare. They fold hand after hand like poker players, conserving capital until the odds are in their favor. When that alignment arrives, they strike with precision and silence. That's the mindset you need. Strategic stillness. You prepare 80% of the time so you can act with total clarity the other 20%. Your job isn't to trade constantly. It's to wait for the consensus to crack. Because every market runs on belief, and every belief eventually breaks. The consensus zone is where that break begins, where everyone agrees too much, where conviction becomes complacency. Professionals study those zones like hunters tracking a heartbeat. Most of the time, price grinds, meanders, fakes direction. Then suddenly it pierces through a level everyone trusts, wipes out the stops, reverses violently, and leaves the crowd bleeding. That's asymmetry in motion. Small risk, massive potential. You can't find those trades by chasing. You find them by watching, by waiting for exhaustion, by listening to silence before eruption. Patience isn't inaction. It's restrained aggression. The amateurs fill the void by overtrading. They fear missing out more than losing money. The professionals fear emotional depletion more than missing a move. They know every mediocre trade drains focus and confidence, so they protect energy like capital. But even when you find the perfect setup, timing is everything. Most traders fail not because their direction is wrong, but because their entries are immature. They enter too early, seduced by motion, fooled by adrenaline disguised as intuition. They pick fruit still green on the branch. The pros wait for confirmation. The retest, the reclaim, the sweep. They let the crowd commit first. They let the liquidity pool fill. Then they enter last and right. Their entries age like good wine. They don't chase candles, they wait for structure. One of my students, Leo, learned this after blowing 3 accounts. I made him sit in front of his chart for an hour, without touching the mouse. Just watch. When the setup finally aligned and confirmed, he entered late by his old standards, but it became his biggest winner of the year. His message to me read, "Doing nothing finally made me profitable." That's the paradox of precision. Waiting creates clarity. Every premature entry carries invisible costs. It doesn't just lose money, it drains your psychological capital. You start doubting your plan, you move stops, you cut winners short. Impatience is the tax amateurs pay for comfort. If you can delay the impulse, you regain control. Because the market rewards the calm observer, not the anxious participant. You think you need more information. You just need longer silence. But even the best entry means nothing if you can't hold. The art of holding separates operators from opportunists. Every tick of profit tempts your fear. Every retrace whispers regret. And between those two emotions lies the discipline that builds fortunes. Most traders don't lose money. They just stop winning too early. They take profits because they crave certainty. They exit because the green numbers feel temporary. They don't realize the market was never their enemy. Their fear of giving back was. I've seen traders exit a 10R setup at 1R profit and call it discipline. It's not discipline, it's disbelief. They didn't believe they deserved the full move. The professionals trail beneath structure. They use market logic, not emotional safety. A higher low breaks, they're out. Till then they hold. They don't stare at their P&L because they know attention feeds emotion. They measure their trades by adherence, not by outcome. Every early exit is a confession that you trusted fear more than your plan. But nothing influences your emotions more than position size. Every heartbeat you feel while in a trade is a direct measurement of your risk. Too big and logic disappears. Too small and boredom sabotages you. You think you have a mindset problem. You have a size problem. Professionals don't size based on confidence. They size based on fixed risk, 1%, sometimes less. Because survival is the foundation of compounding. Risk 10% and 10 bad trades end your career. Risk 1% and you have the space to learn, to adapt, to breathe. Position sizing is emotional architecture. It builds a container strong enough to hold your mind under pressure. Without it, every decision collapses into noise. Calm minds compound capital. Nervous hands destroy it. Once your size is aligned with your nervous system, everything changes. You see clearly. You wait naturally. You think in probabilities instead of hopes. You stop reacting and start operating. That's when you build your 20/80 map, the record of where your real profits come from. You analyze your last 100 trades. You highlight the setups, time windows, and emotional states that yielded the best results. You discover patterns. Maybe your top trades happened during London reversals, maybe only on NASDAQ, maybe only when you slept well. That's your edge map. Guard it like treasure. The rest, everything outside your map, is noise. Every trade taken outside that map drains your focus. The pros don't hunt everywhere. They farm where soil has proven fertile. When you align with your 20/80 map, you transform chaos into clarity. You stop forcing trades. You start waiting for your moments. But no system lasts forever. Volatility changes, liquidity shifts, patterns decay. The amateur reacts by scrapping everything and chasing the next guru. The professional evolves through Kaizen, small, relentless iteration. They isolate one variable at a time. They widen stops by half an ATR, or adjust entry timing by 10 seconds, or add a filter for volume. They tested over 50 trades. They keep what works. They discard what doesn't. Evolution by millimeters. That's how consistency compounds. Not through revolution, but refinement. You think you need breakthroughs. What you need are micro upgrades repeated until they feel boring. Kaizen isn't exciting. It's unsexy discipline. But that's why it works. Then comes the day everything breaks, the crisis day. The market melts, spreads widen, news flashes red. You watch your screen dissolve into chaos. That's when your crisis protocol saves you or exposes you. Professionals have one. 3 losses, step away. Hit a drawdown limit, power down. Breathe, right, reset. They treat their capital like oxygen. They protect it before pride. 'Cause you can't trade tomorrow if you bleed out today. Amateurs pray for reversals. Professionals plan for extinction. When volatility erupts, cortisol hijacks your brain. Logic collapses. That's why you automate rules before emotion hits. Survival isn't luck. It's preparation rehearsed until reflex. Every great trader has scars from a day that almost destroyed them. The difference is whether they learned or repeated. Crisis reveals character. After survival comes structure. That's when discipline turns into identity. You stop forcing yourself to follow rules. You simply can't break them. Cutting a loss feels natural. Letting a winner run feels obvious. The market slows down. You see patterns that others miss because you're no longer fighting yourself. Discipline stops feeling like a cage. It becomes freedom. And from that freedom, a new mindset is born, the operator's mindset. You stop calling yourself a trader. You start running your trading like a business. Every position is an investment decision. Every loss is an operating expense. Every win is revenue. You manage risk like a CFO, process like a COO, and mindset like a CEO. You design a system around yourself. Capital rules, setup filters, daily checklists, weekly reviews. You track expectancy, reward to risk, drawdown, rule adherence. You know your numbers the way pilots know instruments. Because the moment you stop measuring, emotion takes control again. You think you trade charts? You actually trade behaviors. The professionals understand this. They build dashboards, journals, feedback loops. They track not only results but decisions. How many times did they hesitate? How often did they break plan? They quantify emotion until it loses power. That's the final stage when trading becomes quiet. You no longer crave excitement. You crave data. You no longer react to profits or losses. You react to process deviation. When that shift happens, you stop needing the market to validate you. You already know who you are. You are the system. The market doesn't care about your opinions, your hopes, your analysis. It rewards consistency. It rewards humility. It rewards those who know how to survive their own biology, long enough to let the math work. Trading isn't about predicting the future. It's about managing yourself in the present. The 20/80 profit map isn't a strategy. It's a mirror. It shows you where your belief, patience, and discipline intersect with reality. It forces you to accept that most of what you do doesn't matter. But what does matter, matters completely. Build asymmetry. Wait for your 20%. Trade small, trade smart, trade without ego. Let your winners pay for your mistakes. Protect your capital as if it's oxygen. And remember, the market doesn't pay you to be right. It pays you to stay alive long enough for the math to unfold. In the end, every trade you take is a reflection of who you are. The disciplined cut their losses and compound freedom. The desperate chase redemption and compound pain. The choice is silent but constant. Every click, every breath, every hesitation reveals which side you're on. Lose small, win big. Build your machine, 'cause the market doesn't destroy traders. Ego does. And once you learn to silence that voice, the one that needs to be right, you'll finally hear the one that's been whispering truth all along. Discipline is the only edge that never decays.